Hey everyone, welcome back to the channel. In today's tutorial, we are diving into the practical application of accounting principles using QuickBooks. We are going to be tackling a comprehensive problem based on the financial records of Chee, a sole trader in Uganda. As you can see on the screen, we have a trial balance as at 31st May 2023, along with some crucial additional information here. Our goal for this video is to use QuickBooks to generate three key financial statements. That is the statement of profit or loss for the year ended 31st May 2023, then the statement of financial position as at that date, and the statement of cash flows. Whether you're an accounting student, a small business owner looking to understand your financials better, or someone keen on mastering QuickBooks, this step-by-step guide will walk you through the process. We will cover everything from setting up the initial data to adjusting for accruals, prepayments, depreciation, and ultimately generating those insightful financial reports. So grab your coffee, open up your QuickBooks, or just follow along, and let's get started on transforming this trial balance into the meaningful financial information. So we need to create the company file first. This is Steven T, sole trader. So let's create our company here very fast. Let's get your business set up quickly. Use the default start. Company name is the required field. Steven T. City, country. You see that we don't have most of the information here, but the company name is the required one. So if we enter that, then we can continue without the other information. Can continue. Country, I'm using other because you see Uganda is not among the countries listed here, so I will use other. Click next, select your industry. According to the information given, we are limited with the information we have, so we don't know the exact industry, but we are going to just assume. Let us assume that this business is a general product based business. So how is the company organized? We have been told it's a sole proprietorship. The first month of the fiscal, that is June, because if they are closing 31st May, then it means that their fiscal year starts 1st June. So select June here. Then next. Password, this is optional. We can skip this for now. Create your company file. Your QuickBooks information is stored in a file called the company file. Click next to choose a file name and location to save your company file. So next. When I click next, now you see a new window which is all about saving. So you have to select where you want your work to be saved. Normally for students, you have to create a folder. In fact, you have to create a folder before you initially launch QuickBooks. That folder, that's where you have to save your work. So let me save on the desktop. The file name is Steven T. So I save. QuickBooks is creating my new company file, so we need to wait until when the company file is created, then we'll continue. So a company file has been created. Customizing QuickBooks for your business. Now we are going to customize. Next, we will customize QuickBooks by turning on the features that best meet your business needs. So you click next. What do you sell? Now, according to the information we have, this is just the trial balance and the name of the business and how the company is organized, that is sole, how the business is organized, that is sole trader. We don't have more details about the business, but since we use the general based product business, we can use products only as the answer to what we sell. Then you charge sales tax recommended to your business. The rest I'll use recommendations, though if we add more information about the business, then you may find that some of the recommendations are likely to be changing, but for this particular case, I'll use the recommendations. Using statements in QuickBooks, they are recommending a yes. Using progress billing, progress invoicing, no. Do you manage bills you own? Yes. Tracking inventory in QuickBooks? No. Tracking time in QuickBooks? So I'm just following. I'm just using the recommendations. But sometimes you find that you have to change. Select a date to start tracking your finances. Let us use today's date or the first day of the quarter or month, because our date is 2020 information. The year end is 31st May 2023, so we have to start tracking the finances. That is on 1st June 2022. June 2022. Review incomes and expense accounts. These are the income and expenses accounts that have been created for us. There. So click next. Congratulations. So go to setup. Now click on start working. So this is what we call the QuickBooks home page. You first close this window for the accountant center. Then what you have on your screen is what we call the QuickBooks home page. Now what we have to do next, we have to enter the trial balance. This is our trial balance. We have to enter these details. We have to create all these accounts. And of course, there is not any direct enter trial balance function in QuickBooks. You will essentially be setting the starting balances for each account as at 1st June 2020, because that's the beginning of the financial year. For the balance sheet accounts, that is assets, liabilities, equity, you will likely use the journal entry feature to record the opening balances. And as you're recording the balances, make sure that the debits and the credits balance. For the incomes and expense accounts, these will start with a zero balance at the beginning of the year, and their balances will accumulate as you record transactions. So let's start on entering the trial balance in QuickBooks. So we are going to create all these accounts one by one. On the QuickBooks home page, on your extreme right, you'll see the company working area, and under this we have the chart of accounts. We have the chart of accounts. Now, the chart of accounts, this is very key. This is the first crucial step. The first crucial step always is to ensure that your QuickBooks chart of accounts accurately reflect all the accounts listed in the trial balance. So you have to make sure that all these accounts listed on the trial balance are accurately reflected on our accounts listed here. So you likely need to create new accounts for some of the items not already present. So let us see how to create these accounts one by one. You have to pay close attention to the account types, that is assets, liability, equity, income, expense, as these will determine how QuickBooks treats the data and where it appears on the financial statement. So let's create the account one by one. Bottom left, you will see account. Click on the drop down, then you will see new. So we are going to create the different accounts as per the trial balance. The first account is property at cost. Property, that's a fixed asset. So you click fixed asset. You click on the fixed asset as the account type, then continue. So the account name is property. Save and new. Now under this under the new account name, I'm going to put costs. I want to show the cost of the property. So this cost is going to be subcontract or a sub account of our property. Then I'll save and new. Then I also need to show the provision for depreciation, still a sub account of property. This is where we are going to be recording the depreciation of the property. Make depreciation of the property. Then save and new. Then under the fixed assets, still we have equipment. Save and new. I have to show the cost of this equipment, the sub account of equipment. Save and new. Then we also need the provision. Also need the provision for depreciation, still sub account of property. Sorry, equipment. And save and new. Next on your trial balance, you have the purchases. Account type purchases, that is cost of goods sold. Purchases, save and new. Then from the purchases, we have sales. Sales, that's income. So you have to change the account type to income, sales. So now there is a warning. This name is already in use. Please use another name. So our sales are already there. We need to just move to the next account. That is inventory as at June 2022. So inventory, that is opening inventory. That is cost of goods sold. Inventory as at June 2022. Then next is discount allowed. Discount allowed is an expense. The business account name. Discount allowed, that's an expense. Save and new. Next is discount received. Discount received, that is other incomes in this case. Discount received, other income. Return outs, the account type, that will be cost of goods sold. Call it return outwards. Now return outwards reduce purchases, so it's going to be some account of purchases. Wages and salaries, those are expenses. Change the type, the account type, wages and salaries, save and new. Then recoverable debts, those are expenses. Recoverable debts are expenses. Then we have loan interest, that's an expense. Loan interest, that's an expense, save and new. Followed by other operating expenses, still expense. Other operating expenses, save and new. Followed by trade payables. Trade payables, that's accounts payable. Trade payables, save and new. Followed by trade receivables. Trade receivables, that's accounts receivable. Trade receivables, accounts receivable, save and new. Followed by cash in hand. Cash in hand, the account type is bank. Cash in hand, save and new. Then next we have bank, which is 1300. Account name is bank, account type is still bank, save and new. Then we have drawings, that is 24,000 drawings. Drawings, that is equity. Drawings. This can be a sub account of okay. We can leave them to the drawings are part of equity, so this will be a reduction in the equity. Let's not make it a sub. Let's ignore a sub account. Because if you select owner's equity is already an account that has been automatically created by Quickbooks. So let's ignore, let's just treat it as drawings, then the account type is equity. Then allowance for receivables. Allowance for receivables, that's accounts receivable. Allowance for receivables. Sub account of accounts receivable. Then 17% long-term loan. That's a long-term liability. %, long-term loan, save and new. Then lastly, we have capital as at 1st June 2022. That is equity. So capital as at 1st June 2022. Then okay, those are the accounts that I should save and close because that was the last account as per the trial balance. So this is our chart of accounts. Now you see all these accounts as per the trial balance we have created them. Now next what we have to do is to enter the balances, to enter this trial balance in QuickBooks. We need to enter all these. This is the trial balance as at 31st May 2023. So what you have to do now, you can close the chart of accounts. All the accounts as listed in our trial balance, we have those accounts here. We have created them. So now we are going to enter the balances. So you'll use accountant, then you go to, that is accountant in the toolbar menu, then you make journal entries. Make journal entries. The entries we are making, these entries are as at 31st May 2023. Don't forget, 31st May 2023. At the end of there, because these balances are as at the end. So we start with property cost. Property cost is how much? Property cost is shillings 120 millions. In fact, I have to change the settings. I have to change my currency to Ugandan shillings. I think I need to work on that. You click on edit in the toolbar menu, then you go to preferences, then you click on multiple currencies. There are no personal preferences for multiple currencies, so you need to click on the company preferences. No, I use only one currency. Remember, now the US dollar is the default currency here. I will click on yes, I use more than one currency. Then select the home currency using transactions. We want UBX. You can click on view more currencies and you see Ugandan shilling here. Okay, let us make it active. Yes. Your company file will now close and reopen with your updated settings. Okay, so yes. The transaction is not in balance. Make sure the total amount in the debit equals the total amount. Let me first clear. We want to edit the currency first to UBX. Select the home currency using transactions. Yes, Ugandan shillings. Okay. So because of the setting, because of the editing of the home currency, our company file has been closed, but now it's opened again, so we can continue with our journal entries. Make journal entries. We want to enter those balances. The date is 2023. Don't forget. 31st May. So property cost, that's 120 millions. You enter that. $120 millions. That's property. Followed by equipment, 80 millions. Equipment cost. These are assets, normal debit balance. Then our provisions for depreciation on property, that's credit. Provisions for depreciation property, that's a credit balance of 20 millions. Provisions for depreciation property, 20 millions. Then a lot of the equipment. Equipment, that's 38 millions. That is 38 millions. Next is purchases. Purchases, that's 250 millions debit. Followed by the sales. Sales, that's 402 millions, 200,000 sales. This is supposed to be on the credit. I think there was an error. It's supposed to be on the credit. 402 millions. 402 millions, 200,000. Those are your sales. Then you have the inventory as at 1st June, that's 50,000. That's 50 millions. 50 millions. Then followed by discounts allowed. Discount allowed is an expense. Debit, 18 millions. Millions. Followed by discount received, 4.8. Discount received, 4.8. That's an income. Followed by return outs. Return outs, that's how much? That's 15 millions. Credit. Followed by wages and salaries. Wages and salaries, that's how much? That's 58.8. 8.8, followed by recoverable debts, 4.6. Followed by loan interest of 5.1. Loan interest is 5.1. Recoverable debts, 4.6. We have that. Okay. Loan interest. Loan interest is 5.1. Followed by what? Followed by loan interest, then other operating expenses. Other operating expenses, that is 17.7. Then followed by trade payables. Okay, the trade payables, I can enter the trade payables for now. Trade payables, that is 36 millions. 36 millions. Now for the trade payables, there has to be a name for a vendor. So let me just add a name here. We have to add a name for the vendor. Trade payables. We have to add a name for the vendor, though we don't have the customers list, but let me just add a name. Let me put senior. as the vendor name, because you find that we cannot save without the name of the vendor. For trade payables, there has to be vendors at the first name. Now click OK. So at least we have the name there, so we can save. Then receivables, let me first ignore the receivables because I cannot in this in make general entries, you cannot combine the receivables and the payables in this transaction or in this journal entries which we are making. We cannot combine receivables and payables. So you can first ignore everything now concerning the receivables. First ignore because I have the trade payables, so I cannot enter anything with receivables for now. So meaning that receivables, I'm going to first ignore them. I'll bring the cash. I'll enter them later. Our cash in hand is how much? That is 300,000. That is 300 millions. Is it? Here we have 300, so that is 300,000. Okay. Then bring your bank. Your bank is 1.3. The bank is 1.3, followed by the drawings. Drawings, how much? 24 millions. Then allowance for receivables, I'm going to first ignore because this is a sub account of receivables. We can't combine receivables and payables in this journal entries we are making. 17% long term. This is a credit balance. 30 millions. That is 30 millions. Followed by now capital. Our capital, we see here, I'm going to leave the 83.8, but we are going to adjust it because we have to enter the receivables as well as the allowance for receivables. Let's first save for now. Remember, you cannot save this when your debits don't equal to credits, and according to what we have, we see the debit equal to the debits equal to credit. So I'm going to first can say save and new. So we have saved that we have saved our journal entries. We are going to check on them. But let me first now enter the trade receivables. Trade receivables are their balances. How much? Trade receivables. Their balance is 38 million. So you can enter them now. 8 millions. Now this is an asset. Our capital will be credited. So as I debit the assets, now capital will be credited. Then you can save and renew. But before you save and renew, trade receivables, here there has to be a name of the customer. Let me just add a name. Let me put Alex, customer, 23, 31st. The names I'm just creating them because we don't have that in the question, but now we need to, for us to be able to continue and save, there has to be a name when it comes to receivables and payables. You can save and new. Let me also now bring the allowance for receivables. Allowance for receivables. How much was the allowance for receivables? That is 500,000. It's a credit. So meaning that my capital as a start will be debited is the same amount. Now we can save and close. Oh, The transactions of accounts receivable must include a name. Yes, our account receivable was Alex. Okay, close. So I've entered the trial balance. When we look at the chart of accounts, we can have a look at the balances, the accounts and their balances. As you see, bank is there, cash in hand, the trade receivables are there. Everything is here. Everything is here. And surprisingly, now your capital as at 1st June 2022 is 121,300,000, which is the same which you have in the question. So our balances have been all entered. So now what we have to do is to work on the additional information. The chart of accounts, as I've told you, the chart of accounts is key. You have to ensure that the QuickBooks chart of accounts accurately reflect all the accounts listed in the trial balance. So this is our chart of accounts. Now what we have to do next is to work on the additional information. We have to work on the additional information. So we have to make some adjusting entries here. Let us see how to deal with the additional information one by one. Now, according to the information which we have, the first note, we see inventory as at the close of business has been valued at cost, shilling 42 millions. Now, this is closing inventory. We need to record this. And of course, this inventory, of course, now this will involve adjusting the cost of goods sold. So let's see how we can record the closing inventory. You still make journal entries. Yeah, date 31st May 2023. Everything we have is at 31st May 2023. So I'll debit inventory, but now I need to create a new account. And this account the account type will be other current assets. Continue. The account name is going to be inventory. Insert and close. So our inventory is going to be debited with how much? With 42 millions. Then I have to create another account called closing inventory. Now this is cost of goods sold. Account name. Closing inventory. As at 31st. Save and close. So that's how we recorded the closing inventory as per the additional information. Now the other note is about wages and salaries. We have been told that the wages and salaries need to be accrued by shillings 800. Accrual means that an expense has been incurred but not yet paid. So still you will need to create a journal entry to recognize this expense. So here we have to debit our wages and salaries, and then you credit a liability. You can call it accrued wages payable, maybe. So salaries and wages to be debited with how much? 800,000. 800,000. Then we need another account which we can call accrued wages payable, maybe. This is other current liability. That's the account type. accrued wages payable. Accrued wages payable. Close. So that's that. Other operating expenses are prepaid by shillings 300. Now this is a prepaid expense. A prepayment means an expense has been paid in advance. You will need to reduce the expense. So we have to credit the other operating expenses and then create an asset, which is prepaid expenses. So we need a new account, prepaid expense. That's our current asset account. In fact, you can see even here other examples. There is prepaid expenses. So account name is prepaid expense. Save and close. How much are the prepaid expense? That is 300,000. Then you credit the other operating expenses. We have to reduce the other operating expenses. Next is the allowance for receivables is to be adjusted so that it is 2% of the trade receivables. What is 2% of the trade receivables balance? How much are the trade receivables? Trade receivables, you have 38 millions. So 2% of 38 millions, that's 760. You need to compute this. That is 760. That is 760. So you're required to adjust the allowance for receivables so that it is 2% of the trade receivables. 2% of 38 millions, that's 760,000. But the allowance for receivables initially is 500. So meaning that the allowance for receivables is going to be increased. So allowance for receivables to be increased. When you increase the allowance for receivables, how much is the increase? That is 760,000 minus the 500 that has been reported. We have an allowance of 260 increase. So allowance for receivables will be credited. Don't forget to put the name because this is the sub account of trade receivables. So you have to put the name. Then what do we debit? Allowance for receivables, if they are increasing, that is an expense. Then if they are decreasing, that will be other income. So let me debit the bad debts. Let me just increase on the bad debts. In fact, you call them irrecoverable debts. Let me increase on the debts by 260. Then depreciation for the year ending 31st May 2023 are still being provided for as follows. Property, that is 1.5% on cost. Straight line, that is on cost. Property, that's 120M. Then for the equipment, that is 25% reducing balance. Reducing balance, you get the cost, which is 80 minus the depreciation of 38. What you get is what you subject to the 25%. So what is 1.5 of 120 millions for the property? 1.5% of 120 millions, that is 1.8. So we debit the depreciation expense. That's 1.8. Then I'll credit the provision for depreciation on property first. Property provision for depreciation, that's 1.8. Then still I'll debit the depreciation expense by how much? 80 millions minus the 38 millions. Provision for depreciation gives you a net book value of 42M times 25%. That gives you 10.5. So debit depreciation expense by 10.5 and then still credit the provision for depreciation equipment. That is 10.5. Any additional information? No, we have made the adjusting entries. Even for depreciation, we have entered that. So now I think we can save and close. So we have entered just the additional information. You see your accrued wages payable, they are there. Inventories there, the closing inventory, your prepaid expenses are there. So we have entered the trial balance as well as the adjusting entries as well as the additional information. Now what we have to do, according to the question, we have been told to use Quickbooks to prepare and memorize the following reports. Now once all the initial balances and the adjusting entries are recorded, now Quickbooks should be able to generate the financial statements. Quickbooks should be able to generate the financial statements. So how do we generate the financial statements? We go to the reports. We go to the reports section. Now reports, then we click on report center. Click on the report center. Click on the report center, you'll see company and financial. They want us to come up with a statement of profit and loss. So under company and financial, we have profit and loss standard. Let's double click on this. Profit and loss standard. So you have to adjust the dates, please. This will be from 1st June 2022. 1st June 2022 to 31st May 2023. The date, oh, okay. This is 31st May. Okay, this is your statement of profit of Stephen Chee. As you can see, that is your statement of profit or loss of Stephen Chee, and we see that our profit for the year. How much is the profit for the year? That is 46,740. That is 46,740,000. That is your net income, or you can call it the net profit. So that is our statement of profit or loss for Stephen Chee. You have to memorize. So this statement shows the revenues, cost of goods sold, the expenses to arrive at net profit. As you can see, the sales are there, cost of goods sold are there, everything is clear. As we can see, our gross profit, the expenses are there, and then other incomes, then our net income or the net profit. So how do we save? You click on memorize. Name, we can say, can give it Stephen Chee's profit and loss. Stephen Chee's profit and loss. Where do you want to save? Save in memorized report group. Let us save in company. Okay, accountant. Delete the accountant report group. So that one has been saved. They also want us to come up with a statement of financial position, the balance sheet. So still, now our statement of profit and loss has been saved. We are going to check on that. Let's now come up with a statement of financial position. That's the balance sheet. You have to adjust the date. We want as of 31st May 2023. So the balance sheet is always prepared as at. That's why you see that it is as of today. But we want 31st May 2023. And this is the balance sheet, as you can see. That is the balance sheet of Stephen Chee. That's the balance sheet of Stephen Chee. The assets are there. Total assets are there, the liabilities are also there. So everything is very, very clear. Total assets, you have 200, 10,840,000. Still total equity and liabilities, you have 210,840. The fixed assets are there, you see their costs are there, the provision for depreciation is also there, property, cost and depreciation, they are there, then our total fixed assets, then the liabilities, their current liabilities. So everything is clear and the current assets are also there. So that is our statement of financial position. Let's also memorize this. 7 memorize the report group. Call it Stephen Chee's. Stephen Chee's balance sheet. Still 7 memorize report group accountant. Okay. So we have saved. That is our statement of financial position, or you can call it the balance. You can call it the balance sheet. They also want us to come up with a statement of cash flows still under company and financials. We can prepare a statement of cash flows. It's there. Adjust your dates. Adjust your date from 1st June 2022 to 31st May 2023. That's the statement of profit and loss. That's the statement of profit. Sorry, the statement of cash flows, as you can see. Operating activities, investing activities, financing activities. So that is the statement of cash flow. So that report, of course, tracks the movement of our cash, both into and out of the business. So QuickBooks often generates this automatically based on the transactions that we have entered. You might need to review and ensure classifications are correct. So everything is here. Cash at the end of the period, just to confirm, our cash at the end of the period, we have cash in hand, 300, bank, 300, that's 1.6, and our statement of cash flow is reporting that 1.6 as the cash at the end of the period. Memorize and save. This is Stephen Chee. Stephen Chee statement of cash flows, save in memorize report group accountant. So let us check on our reports and see those reports have been saved. Memorized reports, they are saved under accountant, and you see them there here. Stephen Chee's balance sheet, Stephen Chee's profit and loss, then Stephen Chee's statement of cash flows. So those statements have been saved. We have them. That is the balance sheet. That is the balance sheet and accountant. Have our profit and loss. So all the statements are being saved. Now, that's Stephen Chee's. We have memorized the reports. Once you have the reports looking correct, then QuickBooks allows you to memorize them. This saves the reports settings, so you can easily run them again in the future without having to customize them in time. So look at the memorize button or option when you're viewing the report. We have seen how to memorize. If you want to have a look at our report, you just put memorize report, take in the report group, then you see your statements are there already. This is the statement of cash flows. That is the statement. That is the statement of cash flows. So that's how you do this. That's how you do this. And that brings us to the end of this QuickBooks tutorial on preparing the key financial statements. I hope you found this step-by-step guide helpful in understanding how to take a trial balance and the additional information and transform it into meaningful financial reports with QuickBooks. But remember, you have to practice. Practice is key to mastering these skills. I encourage you to try working through this exam on your own and perhaps even apply these techniques to your own business or hypothetical scenarios. If you have any questions or run into challenges, please don't hesitate to leave a comment down below. I'll do my best to answer them. Don't forget to like this video if you found it useful, and don't forget to subscribe for more QuickBooks tutorials and accounting insights. Thanks for watching, and I'll see you in the next video. This is your tutor, Senior Anita.